hello and welcome to everyone who's joined. I'm sure there's probably going to be some people who will continue to trickle in over the next couple minutes. But first of all, thank you. We appreciate people giving up their valuable time to be with us, and I hope and I expect it'll be a valuable session for you because we have the wonderful John Irwin on, who is always dishing out the insights. So as the title suggests on the screen, guys, we're going to spend the next 40 minutes or so running through what we see as the advisor's guide to the Shred program. And I'll pause all the nice kind of technical insights for John to share with you later on. But for those of you not familiar with the Shred program, you'll have a really good run through this afternoon, including all of the recent updates that have been made to the program as part of the most recent budget. Just quick introductions. My name is Dara Burke. I lead the Swoop team in North America, and I'm joined by John. I'll let John say a quick hello from his side.
Hi guys, John Irwin. Over 16 years experience doing shred at Deloitte, PwC, BDO, MNP, software engineer by trade, but yeah, I've been doing shred for and government funding for multiple years. Nice to meet everyone. Thank you for joining.
Great. Appreciate that, John. So I'm just going to quickly introduce Swoop so people have a little bit of context and also talk about where Shred potentially sits in your role as an advisor, whether you're providing outsourced accounting or fractional advisory work or any type of professional services, where this can actually unlock a lot of value for your relationship with clients. But just backing up slightly. I want to make sure everyone understands, what it is that we do, and that will probably provide context as to why we're running the webinar. So Swoop is a platform that matches companies with different sources of capital, loans, equity, grants, and also financial products to help them operate their business more efficiently. And so Swoop uses the data that's in companies in, banking data, accounting data, matches them with the right products that they need to scale and grow. We have over 300,000 businesses globally that use Swoop. We have operations here in Canada and also in the US, UK, Ireland, South Africa, and Australia. So we're blessed to work with many of you that are on the call. And for those of you that maybe haven't worked with us in the past, would love to connect after the webinar and see how we might be able to create value for you and your clients. So just a word about, shred advisory, if I can kind of steal that term. Um, those of you on the call, as I said, might be providing different disciplines of financial advisory and accounting advisory and tax advisory and so on. Because of how significant a program Shred is across Canada and the broad scope of companies that are actually impacted by Shred and those that are eligible to claim under Shred, we think it's essential that advisors really have a good handle on what Shred's all about, who's eligible, what type of projects and expenditure is eligible, so that you can be there for your clients and make sure that one, they're aware of the program, and two, they're taking full advantage of the program, even as it continues to evolve, as we've seen really recently. So really, it's about client value. If you're an accountant or any advisor to a small business owner in particular, there's a real chance that you're their trusted advisor. And so the array of questions that you'll receive may not be limited to the scope of your work. It may stray into things like financing, grants, commercial real estate, and other investment decisions. So we see this as a really easy to implement value lever that can make a huge impact on your clients' businesses. And so that's really the basis for the webinar. Just on the next slide, guys, we spend a lot of time working with accountants, and we spend a lot of time working with people who provide outsourced advisory work for businesses. And so we see firsthand where this can be a really effective either conversation to have or an annual check-in. And so if you're involved in advisory and accounting work for your clients, you may check in with them on the close process, which could be monthly. You may do a quarterly business review. You may do year-end compliance work to make sure that their filing is completed and accurately done for the CRA. each one of these provides an avenue for you to talk about R&D, innovation, knowledge creation, and all of these things that might actually be relevant for a shred claim. I think if I was to highlight one in particular, the year end is a fantastic time, and all the activities leading up to the year end reporting is a great time to check in on a range of things related to the client's business. But even just asking the question of yourself and of the client, is shred being claimed? And if not, are there activities in the client's business that could actually be eligible for funding under shred? Just at a super high level, that's a great kind of context to come at this from. And again, nobody needs to be shred experts. That's why people like John exist in the world. But if we can help you identify the key points that you need to learn, or even the key questions that you need to ask in your year-end review, then we've helped you create more value for your clients. And as I mentioned, it's a huge program, very, very lucrative. And we see businesses every day using Shred as a really fundamental pillar of their funding strategy to grow their business. So, with all that, I want to hand you over to a true expert, not me, who can take you through really the key things that you need to know about Shred and bring us all up to speed in terms of the program changes that have been brought through by the current federal government. So John, over to you. The final point I'd say, guys, on Q&A and housekeeping, there is a Q&A feature on the bottom of your screens if you move your mouse. Those of you more familiar with Zoom will know this. Please feel free to drop comments, questions, feedback, anything into there, and we'll do our best to pick it up organically through the conversation. Anything we don't get to, we'll pick up at the end. But yeah, use this as an opportunity to ask questions. Based on scenarios you've seen and really anything. So John, over to you. Thank you again.
Yeah, thank you, Dara. And just to reiterate, so don't feel like you're alone in this when you're working with your clients. If there's something that if there's a client that you're working with and you think there might be some shred eligibility, feel free to reach out to me. I'm happy to hop on a quick 15-30 minute call, have a quick conversation with a client, and do a deep dive and see if there's some shred eligibility. But I'm hoping that today we will give you some tools to kind of help you to identify if there is some shred eligibility in your clients. And so I just kind of want to start with the different sources of funding so we're all on the same page. When it comes to companies, startups, and different things like that, there's a few different sources of funding. There's personal funds, there's equity investment, there's loans, which there can be loans from the government. Some are low interest or zero interest loans. Then there's tax credits and grants. Now, there aren't too many tax credits that are predominant. There's really only two. One is the SR&ED program, which is a $3 billion plus year program. And then there's the digital media tax credit, and that's for video games, essentially. And then after that, there's grants. So the difference between the two, which you're accountants, you probably know, but tax credits, you get the money after the fact, and grants, you get the money before or as you go. So with the SR&ED program, especially in which you guys probably know, the Tax Act of Canada, on one paragraph of one page of the Tax Act is the SR&ED program, the $3 billion a year program. The good thing about SR&ED is that if someone is doing SR&ED, they are entitled to that money. It doesn't matter whether or not it's an oversubscribed program. It doesn't matter. If they're doing it, they're entitled to that tax credit. And it's refundable for Canadian-controlled private corporations. When it comes to grants, it's very competitive. They're oversubscribed. And but the benefit is you receive the funds either before or as you go. So that's the difference. So SR&ED, so it's Canada's R&D tax credit program. And all tax credit programs are based off of this one manual called the Frascati Manual for Performing R&D. Canada's is the most lucrative in the world, but it's also the most strict as far as what you can claim. And we'll get into that in a second. There are tens of thousands of claimants every year. They do tons of audits, and it's administered through the CRA. So there's a few SR&ED schedules, tax schedules that get filed with the tax return. So just to get into the numbers, this is an Ontario example. So if a company is performing SR&ED and they have salaried employees that are engaged in SR&ED, they can expect to get back about 65 cents for every SR&ED eligible dollar. So if they are building a prototype, if they're doing something where they need materials, they can expect to get back about 42 cents. And if they're using Canadian subcontractors, about 35 cents. The other one is third-party payments, and it's not very often that this happens, but there are these research bodies that companies can pay into to get access to their research that they're doing. There's a list that there's out there. And if they're on that list and they're paying them, they can get about 42 cents back for that. Now, the reason why labor is so much more than materials and contractors, I'll get into in a second in the next slide. So let me talk about it and I'll go back to the other slide. So an example of expenditures in Ontario, and I'll break it down so you understand. So if there is a $100,000 salary and it's all eligible for SR&ED, there's this overhead amount called proxy. So proxy gives you 55% of your overhead for salaries only. There's another way to claim overhead, and it's traditional, which pretty much triggers an audit from the CRA. So if you have a lot of salaries and you're not a manufacturer, you do want to claim proxy method for overhead. So because of that, the eligible SR&ED expenditure ends up being $155,000. Once you do all the calculations, you're looking at about $65,836 as a mostly refundable tax credit. The portion that's not refundable is the ORDTC, which is 3.5%. Now, when we get into materials, say we have 100% of $100,000 of materials, you don't get the proxy overhead, but you can still get the full 100%. After all the calculations, you're looking at about $42,000 of materials. For contractors is different. If you have $100,000 of contractor expenditures, they only allow 80% of the eligible expenses. So you have $80,000 of expenditures, which after all calculations is about 33.98%. That's to put dollars in Ontario. Now, other provinces, it's plus or minus about 3-4% based on the province. So let's talk about changes to the SR&ED program. So in November, so prior to November, before the federal election, there was a document that was introduced to make changes to the SR&ED program after they did all these consultations. So we were worried that because of the federal election, it would have gotten lost, but no, they actually pushed it through. So as of November, they did a first reading, and I'm just going to highlight two of the biggest changes. One is there's going to be enhanced refundability for public corporations. So right now, public corporations are treated the same as a foreign company, which means that they don't get a refundable tax credit, and they're not at the enhanced limit that's 65. They're at about 50% of those numbers I gave you. With this bill, they will be eligible for those numbers that I gave you as a CCPC. The other huge thing is that capital expenditures will be back, which means that if people buy machines for specific testing purposes, they will be eligible for SR&ED for a tax refund. This is awesome because this is a change from about 14, 15 years ago where capital expenditures were allowed, but then they removed them. So this is great that they're bringing them back. We aren't sure if shared use equipment like cloud computing and things like that will be allowed. So we'll have to see what happens. So at the very basic level, the CRA had introduced these 5 questions for eligibility, which they still use as kind of a baseline, but there's a new way that they evaluate SR&ED. And I'm going to go over this really quickly just so that you kind of have an idea. So the first question is, was there a scientific or technological uncertainty? Which means, was there a problem? Was there a problem that the company was trying to solve? Okay. The second one is, it's formulating hypotheses, but if I could put it in layman's terms, it was what did you think would work to overcome the problem? The third question is, what did you try? So what kind of different things or what approaches did you try to solve your problem? The fourth question is, what did you learn from it? Because the SR&ED program and a lot of these grant programs are about developing new knowledge. And so if you can show that you've developed new knowledge outside of the public domain because of the testing and experimentation that you did, there's potential for SR&ED. The fifth one is really, really important nowadays, and it's documentation. Did you keep documentation? What documentation did you keep as the work progressed? Now, 5-6 years ago, when Jason Charon, the head of SR&ED, he's phenomenal. He introduced these new criteria for evaluating SR&ED, which are loosely applied, but still relevant. And they still kind of relate to the questions is why and how. So what they're looking for is it's necessary to determine when new knowledge is needed. So why did you undertake this? And what were you trying to achieve with what you were trying to do? So that's the why criteria. So the work must be conducted to try to advance your knowledge. That's the baseline for that. Okay. And the how is, how did you approach it? Now, a lot of companies that I meet with, when I talk to them about kind of the work they did throughout the year, they'll be like, oh, well, we did trial and error. We tried this kind of stuff. And that's totally fine. But when you dive into the details of the work that they did, it's not so much trial and error as far as throwing darts blindly at a dartboard. They pretty much have a process. It's an iterative approach. And so that's what the CRA is looking for. And that's why a lot of companies who apply for SR&ED on their own fail, because they don't know how to present the information to the CRA. So you hear SR&ED a lot, and you hear me talking about SR&ED a lot, but very little about R&D. And that's because SR&ED is a subset of R&D. So where R&D, where you have your due diligence, and you also have some commercialization, SR&ED, that is not allowed in SR&ED. Where SR&ED starts and ends is where you identify a problem and where you solve that problem, or you determine you can't resolve that problem with current technology. So the due diligence and the commercialization is not allowed in SR&ED. Anywhere else in the world where they do have an R&D tax credit, due diligence and commercialization is allowed, not in Canada though. So the way to approach determining if there's SR&ED is the same way as the CRA approaches. So first, you qualify it. You qualify if there is any SR&ED. The second is quantifying it. So once you qualify what SR&ED there is, you want to quantify it with the financials, with the people, the employees, the contractors, or materials. So a lot of times, most of the time, when someone comes to me with, hey, can you evaluate this company if they're SR&ED? Most of the time I'm presented with what their company project is. And what that means is kind of it's a high level project. So my expertise and what I can bring to the table is kind of drilling down into, well, what was the underlying problem with technology that you were trying to achieve? And so a SR&ED project usually, and most of the time, occurs as a subset of that company project. So there's some slides I'm going to talk really quickly over and go to the next one, but I'm including them so that you have a reference slide. So here's some questions that sometimes I would ask to identify eligible work. And the reason why this slide is here is because what I'm trying to get at is the facts. So we try to understand what the facts are so we can evaluate the SR&ED eligibility. So we don't want to know that the user acceptance stuff. We want to drill down into, well, we want to know what were the challenges, what were the constraints that you faced, what work did you do that you had to try different things in order to achieve what you were looking to achieve. This slide gives you some examples for reference of identifying potential eligible work for tech projects, so ITCS kind of projects. So this is a good reference slide if you have clients who are in the tech sector. Oh, did I remove the manufacturing one? I did. Okay. So there's a manufacturing one, which if anyone's interested, I'm happy to send it out. So what I did here was I put together some examples that you might be able to relate to. So an accountant during a routine tax planning meeting, they asked their food production client a simple question. Any challenges or unexpected expenses this year? And so their client said, well, yes, we spent way more than budgeted trying to develop a shelf-stable version of our sauce without refrigeration, and nothing worked the way we expected. There's so many green flags in this statement that this client is saying that is potential for SR&ED. And so, but if I were to kind of dive in, that we tried that, we were, nothing worked the way we expected, that is a key identifier for potential SR&ED. Now, just because they ran into problems doesn't necessarily mean that they're SR&ED, because when it comes to food and beverage, if they're doing things that are standard practice in the industry and doing things that are kind of known in the industry, but they're still running into problems, there might not be SR&ED. But if they're kind of pushing the boundaries and trying different different ingredients or different ways of recipes that aren't meant to work together, that's where the SR&ED comes in. But this is a great example. So okay, so let's dive into this. Let's get into this a little bit deeper just quickly. So the problem was they needed a 12-month shelf stable without preservatives for the health conscious market. As they were trying to develop that, so this, in this case, there is SR&ED. And the reason being is because there were no existing formulations for their requirements. So they tried different attempts modifying pH levels, which is taste issues, heat treatment variations, natural antimicrobials, and novel pasteurization with specific ingredient sequencing. So they had to hire a food scientist consultant for 6 months of testing. The outcome was they did 14 months of experimentation. They had 47 different test batches. They had extensive microbial testing and comprehensive shelf life studies across multiple conditions. Did it succeed? So they did achieve a 10-month stability. They discovered specific temperature time combinations and ingredient interactions that are not documented in scientific literature. And again, back to the documentation, how did they track it? They had lab notebooks, test batch records, a bunch of different stuff. And so at this point, this is not what you as an accountant would be expected to identify. It would just be from this conversation, you would reach out to a SR&ED consultant and say, hey, I just talked with my client. They told me this. Do you have some time to meet with them? And this is what a SR&ED consultant would kind of get out of it. So another example is during a year-end review, their accountant noticed an unusual line item. Now, we could say R&D, production development, but we can also use any kind of line item where there's an increased amount of expenses that that an accountant would notice from year to year, right? But in this case, it's this line item. They have multiple vendors and they have some high consulting fees. So the accountant asks, this R&D expense is higher than budgeted. What happened? So they said, our new product line took way longer than planned. So we kept running into problems we couldn't solve with our existing process. And so again, at that point, that's when you should reach out to a SR&ED consultant and say, hey, my client told me this. Do you have some time to meet with them? Another example, just quickly, is actually, we'll skip over this one. Let's dive into, hold on, let me just double check this one. Yeah. So one thing is, I know some of you might be smaller firms, some of you might be bigger firms, but if you guys are trying to implement custom software, you're trying to develop your own kind of tools and software and things like that, you might be eligible for SR&ED. So an example of this is if you hire someone to develop an ML, machine learning fraud detection kind of platform, that development is eligible for SR&ED. So if you hire that person, then you're eligible for that 65 cents. If you hire them as a contractor, you're looking at that 35 cents. So if you have an idea, or if you've been sitting on something that you kind of were like, oh, I don't know if I can do this or if it makes sense, and it sounds like there might be something you want to develop and it might be SR&ED eligible, reach out to me. I'm happy to tell you, or I'm happy to give you advice as to here's a path where it would be SR&ED eligible versus here's the path where it wouldn't be SR&ED eligible. So some SR&ED indicators in your own practice: custom solutions beyond off the shelf, multiple failed attempts before achieving success, complex integration challenges between systems, performance or accuracy problems requiring experimentation, and novel approaches. So again, this is a reference slide. These are questions that I've come up with that I've asked clients in the past to try to identify potential SR&ED. If they answer yes to any of these, there is a potential for SR&ED. I'm not going to go through them, but here's some questions here. So here's the manufacturing project. So here's some examples of manufacturing projects that are eligible potentially for SR&ED. So if any of your clients are doing any of these types of projects, there's potential for SR&ED. Now, this is a non-exhaustive list. Like there's a huge list. But these are some examples to kind of get you started. Now, to reiterate about the supporting documentation, it's a requirement. Contemporaneous documentation is ideal. So that's documentation that's derived while the work is being done. This is another slide that you can relate for examples for supporting documentation if your client asks, well, what kind of documentation is required? Now, as a SR&ED expert, I'm able to meet with a client, talk through kind of what documentation they do or what do they do in their processes, and try to relate that to eligible supporting information, if that makes sense. So, summary. The good thing about SR&ED is you can file every tax year where you have eligibility. If a client has an internal project that spans multiple fiscal years, that's totally fine. We would just file a continuing project. So some clients that you might have might be putting together a SR&ED claim themselves. Those are also good leads for you to potentially ask, like, how did it go? How did your audit go? How much time are you spending on SR&ED? Would it help to talk to a SR&ED expert? So those, and It's easy to identify those. You just look at their at the T2 and look at their T661 if they have a T661 or a Schedule 31 or 32. The reason to use a consultant is to help avoid an audit. And in the case of an audit, a consultant will give your clients the best chance of success. Because if a client fails an audit, they're typically flagged for multiple subsequent years for SR&ED. And just to kind of let you know, there is a deadline as far as how far back you can go, and it's 18 months after a year end in order to file a SR&ED claim. The good thing is if one of your clients hasn't filed SR&ED in the past, they're given a lot more leniency. But what we're finding now is 80% of second year claims are being audited. So you're getting it past the first year. And when you file the second year, you've got a high chance of being audited. So next steps, identify eligible clients. And if you want to set up a meeting with me to go over your client list, I'm happy to do that as well. That's what I used to do at BDO, MNP, PwC, and Deloitte. Happy to go over your client list and see if there's any. But if you identify themselves, introduce them to the grants at swoopfunding.com. Then they would schedule a consultation with myself. And if they're assessed and we move forward, we will let you know. Any questions?
So, John, thank you for taking us through all of that. Really, really good insight and good detail. So I'll just pick up questions, and if people are sitting on questions, please feel free to throw them into the Q&A or the chat feature down below. First one I'm picking up, fiscal periods after December 16th, 2024. So what is the implementation date of the new policy as it relates to tax filings? So as I understand it, the question is the new features of the policy related to SR&ED. When do they come into effect, and does it impact 2024, 2025 filings?
Yeah, good question. So I'm unsure as to when it will come into effect. What kind of baffles me is that they have this December 16th, 2024 as a start date, because very quickly that will pass the 18-month deadline. And with the government, as we all know, they work really, really slowly. So unless it passes a second reading before the budget, I don't see it being implemented anytime before the end of this year, if that makes sense. But I could be wrong, and I hope I'm wrong.
Understood. Okay, another question related to billing on referral work. So, I think that's directed at, using a SR&ED specialist to help your clients prepare and submit their claims. So, John, I don't know if you want to speak to that or...
Yeah, so there are 3 ways that I can work with a client. There's hourly, flat fee, and both of those are billed upon filing. And then there's success fee, which is billed upon a notice of assessment or notice of reassessment. But it's not due until the client gets the refund from the CRA. And so the reason why I say that is because when a notice of assessment or reassessment is given, it's typically a 2-week at the most before they get the funds in their account. So that's when the billing would happen for a percentage or success fee based.
Cool. Thanks, John. Okay, another question coming in from Alan. Can you still be eligible for SR&ED if you develop a product that does not get commercialized in the end due to market shift or feasibility changing? So investment in R&D doesn't result in commercialization, I guess.
Good question. And I didn't touch on that in the presentation. So failures are great indicators of SR&ED. So it all depends on the failure and how the failure happened. But if it's because you ran out of money, we'd have to look into kind of up until that point what the work was done. If it's because it wasn't feasible, we'd have to look into why wasn't it feasible, but there's more potential for shred there. And so there's a bunch of different factors, but failures are great indicators of potential shred.
Great. So short answer is absolutely yes.
Yeah.
Great. Um, any other questions from anybody else
Oh,
before?
sorry, I didn't talk about how does referral work. So
Okay.
there are referral systems in place and incentives. I'm happy to talk with them one-on-one with people as well.
Awesome. Yeah, so I think it was asked once or twice, but we will be sending out the slide presentation to everybody that joined today. In there is a slide at the end of the deck around kind of next steps or questions or outreach. So you can reach out to grants@swoopfunding.com. Our contact information is there. So we can set up a meeting with John or ourselves if it doesn't relate to grant funding. So please, feel free to reach out as scenarios present themselves from your client conversations, or if you just want to learn a little bit more. And as I'm talking, there's one or two questions coming in, so I'm just going to pick them up. Is there any way bookkeeping firms can claim shred? Are there any bookkeeping companies in the past who have created something new and claimed shred? So I think you
Um,
covered that on one of your slides, John, like a scenario where an advisory firm is doing some machine learning internally, but I'll let you speak to it.
yeah. So if you're developing if you're trying to develop something to like using machine learning or AI to identify fraud or to help with your bookkeeping, so you're building something that will help with automation, there's definitely potentially shred. But if you're just trying to improve processes and you're doing things that are routine, so like for example, you buy a piece of software and you use it as it is, then no. But if you buy that piece of software and you have to do modifications, you have to write custom code, then yes, there's potential shred.
Nice. It sort of feels like, and I don't want to like misinterpret anything like key here,
Mm-hmm.
but it sort of feels like if you do something that takes up time or any type of investment that could not work, might not work out, like there's a chance of failure. If you're doing something
Exactly.
trial and error based, then you're into shred territory, it feels like, in terms of salaries or contractors or ingredients. So like yeah, if a bookkeeping firm was doing something trial and error based or implementing a new process or something that might result in failure, it feels like the answer is yes. Okay, another question. The juices are flowing. Um, if you have lots of contractors working on new IT projects, are they always shred eligible? E.g., or for example, a new HR system implementation where processes will change. Could be a standard HR system at Workday, but it will change how a company processes and works HR going forward. So, um, yeah, does using contractors on IT projects sort of imply obvious
Good
shred
question.
claim?
No, this is a great question. So so I would say no, because all you're doing is you're changing how the company HR processes work using a known technology. If you were to own to change HR processes, then there is potential there. The other thing is if you're trying to implement Workday into a legacy system that's super super old, and there's a lot of custom modules, bridges that have to be coded, things like that, then yes, there's potential. But if you implement it as is and it works, then there's probably no shred. And back to your kind of point there, Dara, is if it doesn't take much time and there aren't many iterations, then there's likely no shred.
Yeah, and one just follow-on piece from Alan as well.
Yeah,
So if, for example, they were using AI as part of that same implementation, if they were using AI to do some testing, for example, then maybe, or the question is, would that potentially render some kind of shred eligible activity if they were, testing outcomes and so on?
so so AI is finicky. So you can't be using like AI, for example, like calling Claude or ChatGPT or Perplexity or Gemini's API. Like if you're just calling their API and using them as is, kind of as they're presented, then there's probably no shred. But if you're implementing a custom AI solution, then that's where the shred potentially comes in, if that makes sense. I hope I answered that question.
Yes. One more question that's come in, and keep them coming, guys, if you're sitting on any um, new information about the implementation date for the changes in tax filings. So I think you might have covered that a few moments ago, but I don't know if you want to recap on the kind of implementation dates that we're expecting.
Yeah, so they did say that capital expenditures before December 14th, 2024 would be eligible, which kind of baffles me because of how long it typically takes to implement these changes. And so if we're talking 2024, the drop dead date for December year end would be June of this year. So if they don't implement this before June of this year, then any capital expenditures in a December 2024 year end you wouldn't be able to claim unless they extend that deadline. So I'm unsure of how long things typically take, especially with the Carney government. But it seems like with the Carney government, things are more efficient, things are moving more quickly. So I'm hoping that before the summer that we'll have our answers, if that makes sense.
Awesome. Another question, in relation to employee skill level. So if a company for their project was using students, for example, to support with training AI agents or what have you, could their salary be used? Does employee skill level come into it?
So employee skill level comes into it in that. So if you have a student who's in computer science or who's a programmer, um, and you're using them as that, then yes. But if you hire, say, like an administrative assistant who, or like say someone who a PSW, personal support worker, and try to get them to do programming or coding, then they wouldn't be eligible. So they have to be in their field doing their field. But yes, students are eligible. A lot of times, though, you have to take into account that if you're hiring a student, the most of the time they're doing it because they're getting a grant for that. So you just have to back out the amount that you got for that student, and you can claim the rest as shred.
Okay, thanks, John. I do want to touch on one other area actually that we didn't really cover. And John kind of on his first slide looked at the sources of funding for a company. So as I mentioned, Shred specifically is such a big lucrative program in Canada, and there's a lot of companies that use it as an important pillar of their funding strategy, alongside other sources like equity and debt. Knowing that to be the case, and knowing that the Shred claim can be a really important cash flow event for a company every single year that they rely on. We also have a program that I do want to highlight, which is Shred Advance Lending. So if, for example, claim goes in for $100,000 or $500,000, and we know that that's going to be a really important injection of cash flow that can be used to hire people and grow the business, we can also lend against that. So, if, for example, getting that cash today versus in 3 months' time or 6 months' time will generate a return for the business, it may be worth considering getting fast access to the cash or to the capital via lending. So just like you might lend against a future project receivable or a future invoice receivable, you can also lend against a future shred receivable from the CRA. So just want to highlight that you may be looking at businesses in your client book that are fast growing, scaling companies, and each dollar they invest in their sales and marketing engine generates a return very quickly. So if you have those kind of businesses in your client book and they are claiming shred, they're probably the type of finance leaders and business leaders that will want access to the cash earlier rather than later. So we do have a solution for that. It is available, and again, you can reach out to us if you feel like that's interesting.
That's a good point, Dara, because the expectation of when you're going to get your return can be anywhere from 3 to 6 months or even longer if you're picked for an audit. So just take that into account. And so leveraging Swoop to kind of finance that can help you with your cash flow.
Yeah, it's a good point. Okay. Any other questions?
Oh, there is. Do you help with Alberta clients as well? Yes, we do all across Canada, any province.
Okay. So unless there's any other questions, guys, everybody has 12 minutes back in their calendar. So again, just want to say a big thank you to everyone for joining us today. Everyone's time is extremely valuable, and I hope that you got some good value out of the last hour or so with us. Again, I think just the last point I'll leave you with, the scope of this program is broad. So in your client book today and in the future, there's a really high probability that your clients are conducting activities that are eligible for shred refunds. And so you don't need to be a shred expert. Ask the question. We're here to support. And, please do reach out to us. We'll send out the slides. So you'll
Mhm.
have our contact information if you don't already. And, we do look forward to working with you guys in the future and indeed your clients as well. So thank you to everyone who's joined.
Thank you, everyone.